Good to be back. Good to see you. Good to be seen. Ed Ponsi here, your FX educator here on behalf of FX Street. Once again, good day. Good day to you. I'm going to start out, review a few things that we looked at earlier in the week. Actually, I've got Walmart up on the screen. Walmart's kind of interesting. Look at the big drop on Walmart. Can you see how Walmart, you know how a lot of times we look at the 10-day exponential moving average on our currency pairs? I just wanted to demonstrate to you that that it can also work for stocks. It can also work on commodities. It can work on a variety of things. And there's a lot of instances on this particular chart where the 10-day exponential moving average was working both on the downside, you see it here, and on the upside. We see it here, and then it finally caved in over here. We might talk more about that later. I wanted to take a peek at Aussie yen, which we were looking at earlier this week. Aussie yen came oh so close to the 10-day moving average today. I'm showing the low for the day, 83.87, and the moving average 83.84. So it comes within 3 pips of that moving average today. That would have been just a perfect entry. And you can see that it comes within 3 pips of the moving average and then shoots from a low of 83.87, and we are currently at 84.28, so it's going to make about a 50 pip move. It comes within 3 pips of the moving average and makes about a 50 pip move. So it just misses our entry by 3 pips today, and then makes a 50 pip move. And yeah, is that frustrating? Yeah, but we didn't lose anything. It's just that we didn't we didn't make our 50 pips on that one. There's no loss, but it's frustrating, yeah, that it did not quite touch the moving average. But that's part of being a trader, is being able to deal with frustration, and part of being mature is being able to understand that that's part of the deal. That's part of trading, is that sometimes the price comes very close to your target, to your entry price rather, and does not hit. Sometimes it comes very close to your target and does not hit. Sometimes it comes very close to your stop and does not hit. And those are good days, right? So, when you're new at this, sometimes it's upsetting that it does not hit your entry. But after a while, you realize it's just part of the game. And just as we almost hit the entry today and it did not hit, it could have just as easily been a trade where it almost hit our stop and did not hit. And you realize these are just things that happen. It has nothing to do with you or me or anything. It has nothing to do with, market makers or anything of that nature. It's just things. These are just things that happen. But what an incredible trade that would have been if it had just come down a 3 more pips, right? But and we still will buy it if it comes down and hits that moving average. That's our trade setup for Aussie yen. It's a dual setup. We want to buy if it comes down and hits the 10-day moving average. We want to go long. On the other hand, we do want to sell short at 85.40 because that's a very significant figure, as Carlos pointed out earlier this week. It's a level where there has been tremendous resistance and tremendous support in the past, and so we will lean on that figure. If the opportunity arises, we will certainly lean on that number. Okay? Alrighty then. And away we go. All right. So we'll see how this shakes out. Now, we also have a lot of activity today in British pound, and that's another setup we put together last week. In this one, we've been saying for a while that we are bearish under this red line. We are bearish, and we are bullish above it. And then we drew in a secondary line, this green line. We said we are bearish under this green line, that we would sell short under 128. And look at the way this thing dive bombs. It really dropped sharply. Do you understand now why we're bearish under this red line? The price just has a tendency, it has a lot of trouble when we're under the red line here, which is 127.85. When we are under that line, the price has a lot of trouble climbing. And we're above that red line, it tends to bounce. That's just the way it is, just something that we identified, just like Carlos identified an important level in Aussie yen yesterday at 84.50. We identified this one some time ago, and it has held true. And certainly if you were lucky enough to get the entry at 128, you certainly hit target 1 at 127.75 and target 2 at 127.05, and it even dropped 100 pips after that and dropped under 126. So and it's now rebounded back up to 127, which was our second target on this trade. But that's we're long out of it by then. We've long since hit our final target by that point. So again, that's a fascinating chart. And again, as long as we're underneath this red line, I'm bearish. Right, and so that's my line of demarcation there, right? It's under that line, I'm a bear. And so this is a rally. This rally that we're seeing today is a rally that I would tend to think to sell short on this rally. That would be my tendency right now. I see the price rallying up, but I'm in this bear area under the red line. This trade's already done, right? So these numbers don't really matter anymore. But if it does come back up into this area, I'm again selling short, and maybe even before it comes up into that area, I'm thinking of selling short. I can go to the hourly, for example. I don't like to go right back into a currency pair, but this is nice and volatile. And I do got to say, after we've had so many periods of low volatility, it's nice to have a high volatility currency pair winging back and forth like this. It's not only the excitement, it's you got to have volatility in order to trade. It's a necessary ingredient, right? We have to have volatility. It is a necessary ingredient in order to trade. The one thing that we cannot successfully trade is a flat market, unless we're an options trader, right? Then we can sell puts and calls and make money in a flat market. But here we are on the 60-minute, and this is roaring back. What's going on here is very interesting. It has to do with interest rates in the UK. Now, you might recall that recently the Bank of England voted to keep rates unchanged. However, the vote was 5-3, which was a big surprise, that 3 members of the Bank of England actually wanted to raise interest rates. That was a big surprise. Who knew that we had 3 hawks on the Bank of England? That was a huge surprise. Well, there's apparently there's an even bigger rift. The Bank of England has a chief economist, and his name is Andy Haldane. And the big news in the UK this morning is the chief economist of the Bank of England says, I think maybe we should raise interest rates. He has been a dove for a long time. And he is flipping to the hawkish side. So this is like one of the top stories on the economic side in all the newspapers. Haldane has been a dove on the Monetary Policy Committee, and he's the chief economist for the Bank of England. He says, I'm ready to vote for an increase in UK interest rates relatively soon. Right? So he's the guy. This news story is the one thing that is pushing the pound this morning. So you had last week 3 members voted to raise the rate. The current rate is 0.25, and 3 members voted to raise it to 0.5. Right, so 25 basis point increase. 5 members voted to keep it where it is, including Mark Carney. He's the head of the Bank of England. But Haldane gave a speech today, and he said during the second half of the year, which, by the way, begins in 10 days, during the second half of the year, Haldane says, I'm going to join the Hawks. So that makes it 4-4. Uh-oh. They're going to raise rates, which seems crazy. I mean, you're in the middle of a Brexit negotiation. What happened to all this talk about how the UK economy was going to crash and it was all going to go down the tubes? And now they're talking about raising rates. Boy, that's just a very different reality, isn't it? Anyway, that's why the pound is up. Now you know. One of the members is saying, hey, I'm flipping from dove to hawk. Let's take a look at RSI here, because I'm willing to bet it's close to overbought, getting there, right? So according to my RSI, it says, be patient, Ed. It's not overbought yet. Wait, be patient. RSI says, hang in there, Ed. Be a little bit patient. But if Haldane makes that switch, like he says he's going to, it's going to, at the next meeting, which is in August, the Monetary Policy Committee is going to be tied up at 4-4. Why? There's usually 9 members on the committee, but one of them resigned, and that member has not been replaced yet. Now, you're probably wondering, if it's a 4-4 tie, what's the tiebreaker? The tiebreaker is Mark Carney, because that's the governor. The governor is one of the voting members, and the governor is voting against raising rates. But the governor would also be the tiebreaker in the event of a 4-4 tie. So Mark Carney would undoubtedly, at this point, vote not to raise rates. So 4-4 is not enough to raise rates. But man, it's awfully close. And if they can get one more person to flip, then Carney can't stop them from raising rates. Got it? So we're talking 4-4 minimum if Haldane flips as he says he will. Okay? So it's looking like you could see a rate increase out of the Bank of England. It's possible. Any questions, by the way, on any of that, just let me know. So we're going to move on from this. So long story short, we're getting basically, you could consider it 4-4 deadlock, but it's not enough for a rate increase, but we are getting awfully close to a rate increase in the UK. Does it make sense? I don't think so, but it doesn't really matter what I think. It matters what they think. And they think they're going to raise rates. 4 of the 8 are voting to raise rates, but they need 5 because they don't have Carney on their side. Cool. Let's take a look at Euro Pound. Euro Pound is looking now this for the longest time was looking like a topping pattern. If you look at it up to here, that looks extremely bearish, doesn't it? It looks like left, head, right. It looks like a very elongated head and shoulders, or just a really ugly topping pattern. Let's put it this way. If the price had ever broken through this dotted line, this could have really gotten ugly, but it never did. And if you look at it this way, not only did the price never break through, it appears to be trending higher now. We've made a higher high. Here's a high, and here's a higher high. We have high, higher high, higher high. I'm sorry. We have higher lows, we have higher highs, and we've broken this high to make a higher high as well. This looks like an uptrend to me on Euro Pound. I don't know how much I trust it. And frankly, I would like to see it break this area as well. But this could be getting ready to go as well. Speaking of Euro, I'm just going to say it's not an obvious trade setup on Euro Pound, so I might just leave that go. Speaking of Euro continues to look like a rounded top. A rounded top. Let's spread that arc out a little bit. It's taking longer. It's taking a while, taking its time, but you can see it. It begins to look like a rounded top. It just needs to break down to set it off. It's hanging in there a little bit stubbornly. I think maybe we need to get this under 111 to really get the party started. You see how that wick seems to be right at 111. The low of that wick is 111.08. So I think if we can get this below 111, it becomes a short. But it needs a catalyst. Right now, everybody's very focused on the UK. There doesn't seem to be a lot of news out of Europe that's going to create a catalyst to get this moving, at least right now. That's what I mean, like the pound is a lot more volatile than the euro. Check this out. Let's take a look at let's compare the ATRs. So relative ATRs, I mean, look at the way the ATR for the euro is dropping. The euro USD currency pair is only moving 63 pips per day. That's kind of boring, and that's one of the reasons why we haven't been doing a lot of euro setups lately. It's kind of dull, and we've been doing more setups on the pound, and we've been doing some yen setups because those pairs have been a lot more interesting. So 63 pips a day for the euro, right? Let's compare that to the pound, 112. Well, guess what? 112 is exactly double 63, isn't it? No, it's not. It's not quite double. Double 63 would be 123. 126, my bad. But 112 is close to double. Pound dollar is moving almost double Euro USD. So do you see why we've been doing more setups on pound dollar lately and a lot less on Euro USD? Euro USD has just been boring. And the yen pairs have been much more exciting as well. 94 pips a day for dollar yen. That's about 50% more volatility than Euro USD. Aussie yen is moving 75 pips a day. Well, that's more than euro, right? That's one we've got a couple setups on this one. All right, so this is incredible, right? I mean, euro is just dead in the water. Dollar Canada is moving 80 pips per day. That's more than euro. Euro USD is too quiet right now. It's too quiet, right? It's just not got enough activity to it to make it worth pursuing. Okay, let's take a quick peek at a few other pairs here. While we've got dollar Canada up here, you can see that we had a few numbers in place here. Not sure how this worked out or would have worked out. Not sure if this would have been stopped before it hit the first target or not. This was, again, all the setups are hypothetical. We don't make trade recommendations on here. Okay, so all trading is at your own risk, and you are responsible for any trades that you place. Always be aware of that, right? And that's the one thing about being a trader. We're always responsible for the trades that we take, right? But so let's just knock these numbers off here and take a look at the current situation. What have we got here? Are we bottoming? Are we not bottoming? Okay, I see. Here I see it. We had the stop at 13225. Did we get down that low? Yeah, we did. Yeah, so if we had taken that trade, that would have been stopped out. Can't win them all, gang. Can't win them all. That long wick, look at that long wick would have gotten us. Unless, of course, we set that up afterwards. I don't recall. We did, I know, okay, I recall now, because we love this sharp drop. I still love it because that's like air. You know, there's no support, no resistance in this area when the price drops that quickly. And a lot of the reason why that price dropped so quickly was because oil prices were dropping very quickly too. Had something to do with it. Oh, that was because just like Bank of England is talking about raising rates, Bank of Canada is talking about raising rates. Canadian dollar got stronger. My bad. Canadian dollar got stronger because discussion about raising interest rates. Hard to believe, right? But it's been a long time since we've been able to discuss central banks raising interest rates. But they're talking about it. We're doing it in the U.S. We're talking about it in the U.K. We're talking about it in Canada. It's not going to happen in Japan. It's not going to happen in Europe for a long time, but at least in Europe, they're talking about withdrawing stimulus, right? Which is the first step. But it looks like it could happen in the Europe as soon as August. I'm sorry, in the UK as soon as August. It looks like it could happen in Canada maybe before the end of the year, but I'm guessing probably early next year. And I'm saying that because the price of oil is falling and it's so important to Canada. And the price of oil dropping, I think that makes it a lot less likely. Quick check on oil here. Like, yeah, look at oil. I mean, it's below 44. And it's just a straight line move from 52 to 43. I mean, look, that's just brutal. Look at that chart. See, to me, this chart makes it much less likely that Canada raises interest rates. So I'm much more willing to bet that this chart goes back up. And here we are. This is what we were trying to do. We were trying to catch it on the bottom of this line, of that trend line. And when it broke that trend line, we got that would have stopped out our trade. I might be willing to take another shot at this. However, I might be willing to take another shot at this one because I just don't believe that Canada is going to be able to raise interest rates with the price of oil plunging like this. Look at the momentum on that again. Just look at this again. Just forget the price and look at the momentum. Right? Remember before, and forget about, nobody's predicting that this is going to go down to $30. And then recall, nobody was predicting it back here either. Nobody was predicting it back here. Nobody predicted that any of this was going to happen. And it did. Right? You know, here we go. This is a more accurate chart. Look at it. Here it goes to $30. Did anybody think it was going to go from 110 to 30? I didn't hear anybody say that. And then we all just stood there and watched it happen. You know, it's one of the most amazing things. Right? And now, you know, I mean, it's breaking all support. It's breaking all these support levels. Right? It's the lowest right now. It's the lowest it's been this year. This is a weekly chart. This is last year over here. So with oil at hitting its year-to-date low, how can you really think that Canada's going to raise interest rates? I don't know. I don't really believe it. I don't think I believe it. Let's take a quick look at the economic calendar. Today's Wednesday, the 21st. Nothing happening right now. We've got a bunch of stuff coming up later in the day. In 28 minutes, we get the Swiss National Bank quarterly bulletin. In an hour and a half, we get existing home sales in the U.S. That's a market mover. Remember that about 80% of all the homes sold in the U.S. are existing homes, not new homes. So the vast majority of homes sold are existing homes. So that's a very important number. Crude oil inventories in 2 hours. That could be a very big mover of the Canadian dollar. Later today, if you're trading New Zealand dollar, you'll be interested in the interest rate decision in New Zealand. Not expected to change interest rates from 1.75, but the statement from the Reserve Bank of New Zealand could certainly move New Zealand dollar. And that's pretty much it for what's on our radar for now. All right, nothing of major consequence happened earlier, it appears, from looking at our FX Street economic calendar. So we didn't really miss anything. And I think this will be interesting because we're coming back in just under a half hour from now. And so we'll get to take a look at the Swiss franc when we come back. We'll get to see if the Swiss National Bank quarterly bulletin creates any excitement in the Swiss National Bank. So when we come back, we'll start with that. Okay, so until then, this has been Ed Ponsi, your FX educator, speaking on behalf of FX Street, saying thank you so much for listening. I really enjoyed speaking with you. I hope you enjoyed listening, and we'll see you again in 30 minutes. Everybody have a good day. Thanks for listening.